So this is going to be drills practice part 2. All right, so February 26th, that is today's trade activity. We're going to be looking at, where is it? Our 9:30 open here. So when we're looking for a good entry and our system is liquidity retracement expand, what we have at this 9:30 open is an expansion, and then it just continues to expand. Now there's a couple of things. As Friday is the end of the week, we're looking for the week to close out. So we're looking for it to either expand to finish the week's target that I was looking for, or if it's already gotten to your weekly bias target, then we're looking for it to retrace. And in our case this week, we're looking at it with the interest of it continuing to hit its weekly bias target. Now, for the purpose of drills, you don't need to look at targets in the high time frame, but just so I can do 2 birds with 1 stone, I'm going to go ahead and do that. I like to primarily stay in the 5-minute chart. I actually don't need to look at a daily bias or weekly bias in order to trade majority of the time. But then there are times where I will need to go up into higher time frames in order to get in sync with whatever the bias is in order to find a good trade. And that was the case for today. So let's go ahead and I'm going to go ahead and start labeling out the chart, and then we'll go from there. So we're going to start with all of our levels as far as previous day highs and lows, session highs and lows. Now that we have everything, all of our sessions labeled out, what are the things that we want to go ahead and we want to note here? So we've got a previous day high here, previous day low here, and something to note is that the Asia time range typically consolidates. So it is an accumulation range as far as the day is concerned. So if you look at the entire day from the 23 hours that the markets are active, the Asia range is an accumulation range. It usually just consolidates within the channel. If you look back at yesterday's Asia range from here to here, it is not accumulating. If you look at Asia's range from yesterday, high to low, it is not in accumulation channel. It is expanding. And it's also at the very end of this expansion, which leads to a reversal. So you've got some key ingredients here for you to follow. That's going to give you some clues as to where we're going here. So now, this is where we're going to start going into reasons why I would leave the 5-minute in order to get some more information. And so London session starts. We've got London low, London high. This is also technically London high, but this is the London open range, and it is in full expansion. Takes out Asia high. The London low is here. And I know some of you have seen this before. You've seen people probably on Twitter or on YouTube. They go ahead and mark out a chart, and they'll show you a market maker sell or buy model, and it'll look something like this. I'm going to do this just so I can highlight it. If I do that for you and illustrate it, you'll see what I'm getting at as far as why I had a bias that we're going to go and continue to get to this previous day high. But more important than that, and better than that, we're going to want to jump into a 1-hour chart. So on this 1-hour chart, we've got some things going on between yesterday and today's move. I get a liquidity sweep here, market structure shift here, and then I get a retracement into essentially an inverted fair value gap here. So this is a wick at the end of this candle, and I'm considering this in the same way that I consider a fair value gap, as wicks are essentially imbalances. And you can see we retrace basically to the 50 point here, and then our move towards previous day high to capitalize on our target here happens. So back in the 5-minute, if I'm looking at previous day high, low, and I'm getting into the market at this 9:30 open mark and I get this huge expansion, I've got a couple of options. I stay out of this move completely because I don't get liquidity retracement expand in this scenario because it's just capitalizing on all highs. It's not retracing at all. It is just expanding. And so in most cases, for most people, especially if you're starting out, you just leave it, let it run. You don't have to participate in this day. There's no reason that you need to. You want to stick to one model, one set of rules in the beginning, and you want to master those things. This is a little more advanced as far as getting into this kind of a trade and then following it to target. So if I'm looking at this 5-minute chart, New York open, I'm looking for something to get into this trade, and it just really doesn't give it to me. Not if I'm looking at it based on the action at New York Open. I have to have this hourly. I have to have this hourly framework in mind. This hourly chart right here is just as much as the 5-minute is at New York is not a perfect model to enter on the hourly. So liquidity, you get displacement here, which includes this market structure shift, right? You get retracement into a fair value gap or imbalance here in the form of this wick, and then you get expansion. That's everything that we're looking for. We're just seeing it on the hourly versus the 5-minute, which is the chart that we're primarily trading in. So this morning, when I got into the charts and I saw this action going on, right? It was Friday, end of the week, and I see this formation. So to me, we're either going to just die out on this day. It's just going to be kind of a messy nothing of a day. And then this will probably be finished off somewhere in Asia range on Sunday or on Monday morning. Or we're going to go ahead and we're going to take this liquidity here. And we're going to finish out the week strong. And what we do have is at 10 a.m., there is a consumer commitment report that happens. So a high impact news event. Expansion, fair value, adjusting it here. First touch, entry, first target because it's an intermediate high. So high probability is going to get tagged. TP1, sorry. And the previous day high, let's take profit 2. And then as far as stops are concerned, this candle that starts, or the low that starts this expansion, you'll use as stops. You can also start it here if you want a little more protection. But to me, if it's coming down here, I would say that would nullify. So today's trade, you don't have an LDRE, which is what we're always looking for, right? Liquidity displacement, retrace, expand. It's not here, not in this day. And so if I can't find it in this day, I'm doing one of two things. I'm just shutting it down because it's not worth it to risk it if my model and my rules are not being met. You just shut it down. But if I'm going to go ahead and I'm going to look at it as far as there is information here, but I can, and again, this is just a more advanced way to go ahead and get into the market for finding more opportunities. But again, in the beginning, you don't need that. So on the hourly, again, we see our model perfectly set up. Liquidity, displacement, retrace right here, expand. And so the beauty of having this high time frame behind it is on the 5-minute, I'm already in the expansion, right? I'm confirming that this wants to go to its take profit. This is take profit 1 on the 1-hour chart. So if you think about that, this is its high probability target. Then if I'm getting into it on the 5-minute, then I'm entering into a high probability continuation trade. So I'm entering here. I'm already in this expansion. I'm in it. So I'm looking for where I would need to get in order to basically catch my ride on this continuation. So just so that we can go back over it because the drill is for liquidity displacement, retracement, expand. It's all here. We just found it. It's just on the hourly in this case. Liquidity sweep, market structure shift with a displacement, retracement into an imbalance, expansion out of that imbalance and towards the opposing liquidity pool, which is right here. So I'm giving you a bunch of things in here. High time frame bias, utilizing LDRE, liquidity displacement retrace expand. I'm giving you a continuation scenario trade on how you know that it's high probability and how to get in and capitalize. I'm also giving you high impact news event confluence. So high impact news at 10 a.m. retracement to where imbalance, which is going to drive you to the opposing liquidity pool. So hopefully this review / drill was helpful. If you have any questions, please feel free to leave them in the comments. Thank you.